Welcome back, everyone. To continue on the theme of APAC, for this session, we're going to be looking at ByteDance, TikTok, and the future of these companies in financial services. When I first started talking about fintech in general, it was talking about what was happening on Facebook, and then Facebook became Instagram, and then Snapchat was in the picture for a while and then disappeared. There's all of these new platforms and new ways that individuals, not just millennials, but a large swath of the population is interacting in new ways that we would never have expected a decade ago. During this session, we'll take a look at ByteDance, predominantly a Chinese company, and their expansion in Asia and their potential impact in financial services. I'd like to welcome the other two panelists that we have for this session, Varun Mittal and Benjamin Quinlan, who you heard from before during the Asia Pacific sessions. Thank you, gentlemen, so much for joining me today on this to discuss, I think, what's a really interesting topic. Varun, let me maybe start with you. I mean, looking in the context of kind of super apps or apps that we wouldn't traditionally think about being in financial services, can you kind of set the stage? I mean, how did this develop from platforms like Alipay, WeChat Pay, Grab? How did we get to this point where we're looking at these applications to potentially be providing financial services?
So if you look at 50 years back, in Western world, what happened was the payment instruments happened before even the internet came. So people had cards, whether it's credit card, debit cards, way before the internet was even there, way before mobile was there. And that is where the payment rails and everything was working on one side. And when the internet started to happen, they could leverage a lot of that existing legacy infra, which probably was not designed for the internet age, but at least something existed. There was an ACH, no matter how many days or how not so tech efficient it may be, but there existed an ACH in the United States for that matter. On the flip side, what happened in Asia was that the companies started to embrace internet much faster, and the born in internet companies were scaling up fast. And when they needed the financial services infrastructure to complete their own needs, they did not have that infrastructure. So when most of the Chinese platforms, they did not decide to become or go into payments industry. They went in because they didn't. So Ant Financial was born because there was no escrow system. There was no escrow system to trust in a C2C e-commerce platform. People were engaging, chatting, and they wanted to send money to each other. That's why the red packets happened for WeChat. So it was a need. So the new born in internet companies, born in mobile companies were scaling up rapidly, and they were not able to scale because of absence of financial services infrastructure to enable them. So they kept on building more and more components of that to support their core business. And at some point, they built enough scale, enough might that some of those platforms became large enough that they are IPOing it at hundreds of billions valuation now. So that is the phenomenal difference between, and which is why if you see most of the super apps are in emerging markets, China, Southeast Asia, India, you look at LATAM players like Rappi, you see those. You do not see super apps in continental Europe or United States because they had the base infrastructure already there for financial services.
It's really interesting. I mean, if you look back, I think 5 years ago to about 2015, when we first started going to industry conferences and fintech became a term that was being bandied about, it was a lot about the technology. It was what can we do with blockchain? What can we do with AI? Whereas you have these solutions like Alipay that are just like, okay, what is the problem that we're trying to fix? What is the source of friction that we need to address in this ecosystem? Benjamin, you're based there in China, in Hong Kong. I mean, what is the impact that you've seen both in your mainland dealings and there in Hong Kong, which is, for many years has stood as the kind of gateway to China? How have these other apps and these other challengers coming to market affected the nature of financial services there?
Yeah, I think it's really gone from, fintech to tech fin. And the reality is a lot of these applications are realizing that they have the power to really tap into something very unique, which is customer data and insight at a level never seen before. And I think that network connectivity allows them to, I guess, relay some broader thinking around, should we be entering a natural space to facilitate the e-commerce or the transaction legs of what we do, as opposed to using an external provider. So I think naturally it is an area in terms of evolution where you can plug into the next phase of infrastructure, and that many of these apps want to capitalize on, because they do have a captive base. And Asia, just given the dynamics around here, I think I mentioned on the call before, if you really are able to tap into a market like China, or even some of the ASEAN markets like Indonesia, you've got huge populations from which to leverage and then plug in your financial services solution. So the evolution has been quite apparent, and it seems that many people want to attack this space, including the likes of ByteDance. Right?
Yeah, it's a good point. And in Hong Kong, I want to stick with you for a second, Benjamin, around the virtual banks there. I mean, if you look, Varun has kind of laid out the history of some of these apps, and largely they were, especially the Chinese apps, grew in a kind of unregulated market, and then have set up partnerships with traditional banks in what has become a regulated market. And the banking industry is notoriously regulated, and compliance is a big issue. I mean, not even banks want to be regulated as banks, and nor do these technology companies in many cases. Yet we have this unique opportunity in Hong Kong and other markets across Asia with the digital bank licenses. You talked about, Benjamin, which I think is a really good point, about leveraging all of that customer data. We as a company bank in Hong Kong, and occasionally from our bank in Hong Kong, which will remain unnamed, get an offer for a credit card saying, you should apply for this. And then when we apply, we get rejected because of XYZ reasons. Really, our bank has very little understanding about us as customers, as a business. And I can confirm for my retail banking accounts, my bank knows very little about me. How does that dynamic change with the launch of digital banks in Hong Kong and other markets around Asia? I mean, presumably these players will be able to have a better understanding of their customers and then launch more targeted products and services to take market share away from the traditional banks. Or do I have that wrong?
No, I mean, that's the idea, right? To what stage they're there is a different discussion. I think overall, the idea is if you're better able to understand your customers through scraping alternative sources of information, using better AI and machine learning engines over understanding their transaction histories or the nature of their purchases, you start to get a better idea of what you can put in front of a customer in real time. So, and I agree with you, the incumbent banks are absolutely woeful at doing this. I literally phone up my bank and they have no idea who I am, even my own relationship manager, technically, right? So I do think the ability to better personalize and customize products is going to be one of the areas that they can truly differentiate themselves. But again, I think the challenge right here is, how special those products will be. And I think a lot of what we're seeing right now is the product fundamentally different? And my view is a lot of the time, the answer is no. It's just a savings or deposit account offering a better interest rate, or loan products more competitively priced. You're seeing a lot of the VBs actually squeeze the hell out of their own NIMs in an effort to bring customers on board. So the customer acquisition costs have been technically quite high. So while they do, many of these tech companies, for example, might have an active customer base, to still migrate them onto a virtual bank and to, enable the trust of customers to transfer their money from their traditional bank account to a VB has been, it's been something that has picked up a lot of pace in Europe. I think we're starting to see it pick up pace in Hong Kong. But the question is to what extent that can happen, right? And will they ultimately be a substitute, or will they be a complement to the existing traditional players that are operating today?
Yeah, that's a really good point. I mean, that subsidization is quite challenging from a financial perspective as well as a stickiness perspective. I mean, if we look at China, Alipay and WeChat Pay at the very beginning subsidized the hell out of the services for both retail and commercial customers. And once they were able to achieve that market scale, they then were able to get rid of a lot of those. But we're already seeing companies in Asia, Grab in particular here in Southeast Asia has dropped a lot of the subsidies for the drivers and for the merchants and for the consumers as well. And really they're starting to see the limits. I mean, when you have these tightly contested competitive markets, it's very challenging. Varun, I want to come to you. I mean, Benjamin brought up a really good point. I mean, I moved to Singapore from China about 2 years ago, and I picked my bank here in Singapore because the ATM that I wanted to use was the closest to my house. And recently, we were shopping for a mortgage and some other financial products, and it's really, as you would say in Chinese, 差不多 in terms of the products and services offered by DBS, UOB, OCBC, the three main Singaporean banks, are very similar. I mean, how do you get away from that, and how can you do that in a sustainable way? Because Singapore, presumably later this year, will be awarding the digital bank licenses, and we have some really interesting players that are coming to market. I mean, Benjamin gave some examples of how they're trying to attract customers that maybe is a good short-term strategy, but long-term, how do digital banks or challengers in a market like Singapore, where 98% of the population is banked, how do they differentiate, and what is the value proposition that they've got to bring to market to be successful?
See, one of the key differences in the Hong Kong VBs and Singapore bank applicants is most of the Singapore full bank applicants have massive customer base already. All of them already have a working wallet, and that license allows you to embed. They already have wallets and cards off the shelf. So technically your CASA is already there. Only thing is today they can't pay interest on it. Tomorrow they can after the license. So if you look at the taxi company, e-commerce company, gaming company, transport company, all of them will start the counter on at least 500,000. So 10% of the market will be their customer on day one. With a pop-up, click here to upgrade to this bank account. KYC is already done, and because you're not giving credit on day one, on. That is very different from players in Hong Kong, because if you see, the first four started from zero. They have a huge cold start problem, and you have some minimum costs. So those costs are same for 50 customers and 50,000 customers. That cost base is fixed already. So Singaporean banks can significantly amortize it because they will start the counter with a few 100,000 on day one. I mean, they need to be extremely lousy to have less than a few 100,000 on day one, because you have to just convert your existing CASA, existing wallets, which are technically current accounts, into CASAs, non-interest bearing. So, which is why it's a very different ball game. And across Southeast Asia, this game is going to be very different versus Hong Kong. Because in all of these markets, you like Malaysia, it's a telecom company, which is the front runner with the largest wallet. It's a taxi company with the second largest wallet, which is playing. So, which is why these markets are much more the Chinese playbook. You had customer base, then you entered into broader financial services.
Yeah, that's a really interesting point, because you look at a lot of these banks. I mean, if you look at the global kind of challenger banks like the Revolut and Monzos, I mean, they've come strictly in a pure play financial services value proposition. Whereas you look at the Alipays and the WeChat Pays, and they've come from e-commerce and kind of social entertainment, gaming. I mean, getting down into the nitty gritty of ByteDance now. I mean, obviously, TikTok, in my mind, I've tried to use the platform, but I think I'm probably a decade older than I need to be to actually understand why people use it, but it's become incredibly popular. Benjamin, across the region, I was looking for some numbers on this. TikTok has been downloaded 93 million times in 2019. In Indonesia, there are apparently 200 million monthly active users in India now using the app as well, and it's being used for things like education and communication, much more beyond just sharing videos. And Benjamin, what kind of position does that put ByteDance and more specifically, I guess, TikTok in for potentially getting into the financial industry and making an impact?
I think I want to resonate a few of the things that Varun said. So the important thing is TikTok itself is not getting the banking license, right? It's ByteDance with their multi-platforms across all the different markets in Singapore. So the whole rationale is basically, how do they monetize their platforms other than just advertisements, which is really what they're doing now, such as through things like e-commerce, which was being mentioned before, and then a digital bank, or driving merchant transactions through that would be a sensible kind of next step, particularly around building the infrastructure and payments layer. I think the important thing to notice is like even their acquisition of UiPay again was the whole idea of leveraging that kind of payments wallets platform for carrying out transactions taking place on all of its platforms. Like it controls a lot more than just TikTok, right? But the important thing is they're actually applying for a wholesale banking license, right? So they're not going to be engaging with their retail banking customers. So the question is really not applicable in terms of monetizing their, what you would call it, existing clientele and that part of data, which is an interesting move. But if you look, notwithstanding that, somewhere like Grab, as Varun mentioned, a lot of the journeys of these applications within Southeast Asia, they have that customer base. So it's, from ride hailing to food delivery to basically creating this whole kind of super app where you can do everything in a one-stop shop. So I do genuinely think that overall, the question now is how these kinds of platforms can be leveraged to build more of the B2B infrastructure around payments, lending. Like that is really where a lot of companies are pivoting. As you can see, the D2C space is something that relies heavily on scale. And a lot of the time, I would call it the commercial proposition is often questionable because many of these things are free. So, can you cross-sell, can you upsell, can you so on? So I think ByteDance's move is really looking more towards the B side of things and how it can leverage some of its tech and scale that into other parts of the ecosystem in Southeast Asia.
That's a really good point. I mean, Varun, with that in mind, I mean, if as Benjamin rightly points out, it has to be B2B, at least to start. And how does that change the approach to market? And where do you see the gaps in specifically Southeast Asia, let's talk about in a minute, around the needs of SMEs, micro SMEs within the space? Where do you think ByteDance could play a role in that?
See, broadly, if you look at this, right, what has COVID done is it has pushed people to sell online. And if you're going to sell online on multi-channel, the pain point is managing reconciliation, tracking what are you selling, when, where, how to commit resources, what resources where. And that is where if you have a digital first platform, which understands customer discovery, customer distribution, those kind of skills, those kind of real insights, and those kind of ability to build those solutions designed for people who are already on your platform, which is connected to the core activity. Yes, there is a payment link, and that payment link can be powered by your own subsidiary or another subsidiary. That's a secondary output. But the part that you can build solutions around discoverability, fulfillment, figuring it out, what to sell, when to sell, how to sell, that and building the whole ecosystem around is something which is unique for any internet platform. And there are very few platforms globally who are in a position to do it, and which is why if you look at the biggest ones in the East and West have already got into financial services in some shape or form. So which is why at the discovery, if you sit at somebody at discovery layer, you can start to build this on both the consumer side and as the provider side, because you are the one facilitating the commerce. And commerce is the bloodline of economy.
It raises an interesting point. I mean, there's always the chance that, I mean, there have been a surfeit of applicants here in Singapore for both the retail side and the wholesale banking, digital banking licenses. Does ByteDance, do they really need a banking license? Or because we have, plenty of payment companies that are very successful in Singapore, like the TransferWises or Neums that, they have the payments license to be able to operate, but they don't necessarily have the banking license. Could ByteDance just rely on kind of a lesser license that doesn't allow for full service banking and then partner with banks?
See, the premise is this, right? Of course, that's always that's a question for every digital bank. Should you partner with banks, or should you build the full stack? So there are trade-offs to those approach for anybody. Building your full stack is again more expensive, more risk, but then you have control. And then you're not waiting, and you're not worried about the banks being worried about cannibalization and stuff. So it's a premise of, do you want a vertical integration or not? So there are merits to both the arguments, and it's reasonable for people to explore the realm of what does a fully vertically integrated solution would look like. What does it mean? And because you see, the option to go with the partnership route always exists. You can be a vertically integrated and still do partnership, because vertically integrated doesn't mean you will have everything. Doesn't mean you will have the scale to do everything. So partnership you can do anyways. So technically that's a no stress move. Partnership is a no stress move. I'll do with or without. But if there is another opportunity, unless I explore it, I do not know whether it's worth the effort, worth the investment or not. The other one I will do. That's not a mutually exclusive that if I do this, I cannot partner with payment companies. I can. All the banks actually partner with different payment companies. So their view, from anyone's perspective, if you look at, it's not a mutually exclusive. We're not saying no to partner. We'll do partnership, but let's see what else is off, or what else is on table.
Benjamin, would you echo the same sentiment for Hong Kong? I mean, obviously the digital bank licenses in Hong Kong have already been awarded. Many are live already. I mean, is it absolutely necessary for players to have one of those licenses, or could they operate outside of the full stack, as Varun mentioned?
Yeah, this is a personal trade-off choice, but I think people are capitalizing on definitely the wave of interest to offer that full stack, right? And the government backing and regulatory support to do so. So if you have the potential and deep pockets to enter into a space where you can service clients across the whole payments, lending, infrastructure space of which a VB provides you, then go for it a lot of the time. The question, I guess, with Hong Kong that I raised before is whether you need 8 VBs, right? That's a separate question. I personally don't think you do. And, especially in a very, very overbanked market. But in relation to something like, ByteDance's move in Singapore, I think has been planning to invest in Singapore for quite a long time. They've been hiring a team in Singapore that will be in charge of building a network and platform, providing all these cross-border payment solutions. And what's particularly unique about their application for a VB is they're actually placing the joint bid with the Lee family, who founded Singapore's OCBC, right? So there's a lot of contacts and resources in Singapore that can be leveraged. So why not try and leverage this to full scale when you can, at a time where the window of opportunity to basically put that license application in is there? If you're a standalone full service VB, you can differentiate yourself much more than if you're just another payments provider in what is an extremely saturated space. So I don't see this as an irrelevant move. I see this as something where, they're going to have to get up the learning curve very quick if they do get that application approved. But notwithstanding that, it will allow them multiple touch points across the infrastructure layers in Southeast Asia. So, it's an interesting move. Keen to see how it plays out.
It's a really good point. I mean, one of the you mentioned some of the challenges, and they're going to have to get up to speed very quickly. I mean, one of the other key things, obviously, if beyond everything that's been happening politically in the U.S. With Trump himself and the Trump administration, is the potential ban on TikTok in the U.S. and then in India banning a lot of the Chinese apps. Ben, let me stick with you for a minute. I mean, how does these kind of geopolitical challenges play in ByteDance moving into the financial industry, and could we see that having an impact on, either unofficially in some of their like here in Singapore and their license application, or just in general in terms of operationally as they move into financial services?
I don't think it'll impact something like their license application per se. I think the world is balkanizing, sadly, at a very increasing rate, and companies around the world are being forced to make participation choices around where they play and where they operate. I think the only overlay in relation to this is, do they need to add in, for example, more protocols around AML, KYC to manage any cross-border payments if they have a leg with the United States, right? Just like any other bank would need to do right now. So I don't think there's anything unique in this regard. And I think, as I mentioned before, Asia Pacific as an ecosystem is big enough to sustain the operations of certain players, and you don't have to be global these days. It's not necessary, particularly for a VB. It becomes a little bit more complicated managing global data centers and privacy laws and so on. So I think sticking to core strengths and just trying to be able to leverage that for the next logical adjacency and growth. I don't see this as a major issue.
Yeah, that balkanization, I mean, we're seeing that in multiple parts within the financial industry. I think just yesterday at SIBO's representative from the People's Bank of China talking about the Chinese central bank digital currency that's now taking a pace and will be in play certainly by the Olympics in 2022. So there's a big bifurcation that's happening within the financial industry, certainly here in Asia. We're almost out of time for this session, but I just want to wrap up with one key question. I mean, obviously, it's a very global audience here at FinTech South. We're speaking from APAC here. Varun, what are the key lessons that somebody who's sitting in Atlanta or in one of the Western markets should take away from what's happening with ByteDance and TikTok and finance right now? What are the key things that they should know, just very briefly?
So one of the key things to know is that as consumers, they need to be aware of what kind of options are there for them. And notwithstanding the changing political tones, they should look at, as consumer, is the product solving problems for you? Is that something right for you? And that for me is the starting point for all of these questions. Does it solve what customer needs?
Benjamin, same question.
I think the important thing for anyone offshore or globally to remember about Asia Pac is that you don't look at the market in its entirety. I think Varun mentioned it before. It's very, very heterogeneous in its nature. And I think as a result of that, the plays that people are making, whether it be in China, Southeast Asia, or so on, are going to fundamentally differ in terms of their strategic push. SEA, particularly in markets like Vietnam, Indo, Philippines, highly underbanked. A lot of the population and infrastructure still don't have access to financial services, but relying on what is top line mobile phone penetration, right? So how do we connect them through that particular interface? But markets like Hong Kong, it's in China, very different proposition here regarding banking services, particularly in Hong Kong. So again, there is what you would call the ASEAN play, which is more needs-based, whereas the Hong Kong play, it's more sophistication and product-led. So different levers that companies are going to be pulling and different opportunities for both the incumbents as well as the fintechs looking to plug into this broader infrastructure story.
Yeah, it's a really good point. I mean, it's a very heterogeneous place. Even countries like India, you can move 2 kilometers down the road and the needs of a particular village will be completely different than the other needs. And that'll be an interesting area to see where ByteDance can innovate. I mean, one of the things that they've done very well is using AI to have hyper-localized recommendations and services. Whether they can apply that now within the financial industry remains to be seen. We're out of time for this session. Thank you so much, Varun and Benjamin. You can reach out to both of them, I'm sure, on LinkedIn or on their respective websites. Thank you so much for your time. It's been a really interesting conversation and hope you enjoyed it. Back to the rest of the program.
Thank you.